Imagine opening your banking app tomorrow and seeing one message. Your account has been closed. No warning, no explanation, just gone. Can a bank actually do that? Yes, in the United States, banks can usually close accounts without advance notice, and it doesn't automatically mean you committed a crime. Most people don't realize your bank account is basically a contract. Buried in the terms and conditions is language giving the bank the right to end the relationship at almost any time. Why would they do it? Sometimes it's suspected fraud, unusual transfers, repeated overdrafts, identity verification problems, or using a personal account for business payments. Even innocent activity can trigger automated risk systems. And here's the frustrating part. Banks often can't fully explain what triggered the closure. Usually, your remaining balance is mailed by check, but access can be delayed during investigations. If this happens, move your direct deposits immediately, update bill payments, and open a backup account fast. Most people assume a bank only closes accounts when it catches someone committing a crime, but that's usually not what's happening. A bank account is a business relationship governed by a contract called the account agreement. Buried in those terms is broad authority for the bank to end the relationship if the account creates too much risk. And risk does not mean proven criminal activity. It can mean unusual transaction patterns, fraud concerns, compliance costs, or activity that resembles known scam behavior. For example, sudden large transfers, repeated payments from strangers, rapid movement of money, crypto activity, or frequent bounce checks can all trigger review. Banks are heavily regulated under anti-money laundering laws, so they monitor accounts aggressively. In many cases, they would rather close an account than continue investigating uncertain activity. That's why account closures are often risk management decisions, not criminal judgments. Understanding that distinction helps explain why closures can feel sudden, vague, and confusing. Many people hear suspicious activity and assume the bank thinks they committed a crime. Usually, that's not what it means. In banking, suspicious often just means unusual compared to your normal patterns. For example, if you normally spend a few $100s a week, then suddenly receive large cash deposits, international wires, or transactions from different locations within hours, automated systems may flag the account. Banks monitor accounts to detect fraud, identity theft, scams, and money laundering risks. The systems look for patterns, not proof. Think of it like a smoke alarm. It detects signs associated with danger, but it doesn't confirm there's actually a fire. Once an alert is triggered, the bank may temporarily restrict the account, contact you, or request documents explaining the transactions. If the activity can't be verified, or the bank decides the account creates too much risk, it may close the account even without proving illegal activity. Banks don't only close accounts for fraud or unpaid fees. Sometimes an account is closed because the bank can no longer verify the customer's identity. This falls under rules called Know Your Customer, or KYC. Banks are legally required to know who their customers are and keep that information current. When you opened your account, you probably gave the bank your ID, address, and date of birth, but KYC is ongoing. If you move, change your name, or let your ID expire, the bank may ask for updated documents. At first, that usually means emails, letters, or app notifications asking you to verify information. If those requests are ignored, the bank may start limiting services like transfers, card use, or mobile deposits. Eventually, the account itself can be closed. Most of these problems are preventable. Keep your contact information updated, read notices from your bank, and respond quickly to verification requests. When a bank closes your account, the money usually does not disappear. In most normal situations, the bank still returns whatever balance is left after it finishes settling the account. That part matters because the balance you saw before closure may not be the final number. Pending debit card purchases can still post. Checks you wrote earlier may still clear. Fees or overdrafts can also reduce the remaining balance. So closing an account is a process, not a single instant event. Most banks send the remaining money by mail check, usually to the address already on file. An outdated address is one of the biggest reasons people think their money vanished. You also need to act quickly. Direct deposits like payroll or tax refunds usually bounce back once the account is closed, and auto pay bills can fail too. If your account was closed, call the bank, confirm the final balance, verify your mailing address, and ask about the closing balance disbursement status. If your bank suddenly closes your account, the first thing to know is this: in most cases, your money does not just disappear. Usually, the bank freezes new activity, settles any pending transactions, then returns the remaining balance. That often happens through a mail check, though some banks may offer a transfer or a branch pickup. The amount you receive may not match the last balance you saw in the app. For example, a gas station hold, automatic bill payment, or paycheck reversal could still process after the account closes. Banks can also deduct money you already owed, like overdrafts or unpaid fees. And in more serious situations, funds may be delayed by a court order, fraud review, or identity verification process. The key is to contact the bank quickly. Ask how your money will be returned, whether there are any holds, and where future deposits or payments should go instead. If your bank account suddenly gets closed, don't panic, but don't ignore it either. The biggest risk is that your paycheck, rent payment, or automatic bills could fail fast. First, confirm what actually happened. A frozen or restricted account is different from a permanent closure. Check your banking app, emails, and messages. Then, call the bank using the official number from its website. Ask direct questions. Is the account closed or restricted? How will you get your remaining money? Will pending transactions still go through? If the bank asks for ID or documents, respond quickly and accurately. Delays can slow everything down. Next, protect your cash flow. Redirect direct deposits like payroll or government benefits immediately, and update autopay accounts for rent, utilities, and subscriptions. If you still need banking access, open a new account as soon as possible, and keep records of every call, email, and document in case problems come up later.
A bank closing your account does not automatically mean you committed a crime. That's one of the biggest banking myths online. In reality, banks close accounts for many reasons: repeated overdrafts, inactivity, identity verification problems, policy violations, or transaction patterns that don't match the account's normal activity. Sometimes it's simply a business decision. Another dangerous myth is that keeping cash deposits under a certain amount prevents banks from reviewing your account. Banks look at overall patterns, not just one transaction. In fact, intentionally splitting deposits to avoid reporting rules can create serious legal problems by itself. People also assume a closed account means they'll never bank again. That's not always true. Some closures have little long-term impact, and many people later open accounts at other banks or credit unions. The key takeaway is simple: don't trust internet rumors. Understanding how banks actually operate is far more useful than fear and misinformation.
Many people assume that if a bank closes an account, the customer must have done something illegal, but that's often not true. In many cases, banks are managing risk, not accusing someone of a crime. Think of it like airport security. Sometimes unusual activity triggers extra review, even when everything is legitimate. A sudden increase in deposits, moving to a new state, an expired ID, ignored verification requests, repeated overdrafts, or even long account inactivity can all lead to restrictions or closure. Different banks also have different internal policies, so one bank may allow activity that another considers too risky. The good news is that many problems are preventable. Keep your contact information current, monitor your account regularly, respond quickly to bank requests, and understand the basic terms of your account agreement. If your account is closed, stay calm, contact the bank, ask about your remaining funds, and redirect any automatic payments or deposits right away. The answer is yes. In certain situations, a bank can close your account, sometimes even without warning. But the reality is more nuanced than most people think. A bank account is not just a place where your money sits. It's a legal relationship between you and your bank, shaped by regulations, fraud rules, and the account agreement you accepted when you signed up. There's also a difference between a restriction, a freeze, and a full closure. A restriction limits certain features. A freeze temporarily blocks access to funds. A closure ends the relationship completely. Banks usually act for specific reasons, like identity verification problems, suspicious activity, repeated overdrafts, or misuse of the account. If your account is ever closed, your money is usually still yours, unless there's a legal hold. The best response is to contact the bank quickly, redirect payments, and request documentation. And if your bank asks you to verify information, don't ignore it. Responding early can prevent much bigger problems later. Before we end, here are a few common questions about bank account closures. First, can a closed account be reopened? Sometimes, yes. If the issue was something simple, like missing identification, inactivity, or a verification problem, the bank may let you open a new account after you resolve it. But if the closure involved repeated overdrafts, unpaid balances, or suspected fraud, the bank may decide not to continue the relationship. Another big question is credit scores. In most cases, closing a checking or savings account does not directly affect your credit. However, unpaid overdraft fees sent to collections can create financial problems later. People also ask whether they should immediately open a new account elsewhere.
Often, that's a smart move, so paychecks and bill payments continue normally. But it's important to understand why the first account was closed, so the same issue doesn't happen again. Finally, always read bank notices and respond quickly to verification requests.
Most banking problems start small. A missed alert, an old phone number, or a charge you didn't notice can turn into frozen accounts, fees, or fraud headaches later. One simple habit is checking your transactions regularly, not just your balance. A quick 5-minute review each week can help you catch duplicate charges, missing deposits, or suspicious activity before it gets worse. Next, keep your contact information updated. If your bank can't reach you because of an old email or phone number, you might miss fraud warnings or verification codes. Also, respond quickly when your bank contacts you about unusual activity. Just make sure the message is real by checking through the official app or phone number. And don't ignore bank emails or notifications. Many people miss deadlines simply because they delete messages without reading them. Understanding basic banking rules helps you avoid surprises and protect your money long term.
Meet Michael, a small business owner in Texas. For years, his checking account looked predictable. He paid the same suppliers, received regular customer payments, and logged in from the same devices. Banks quietly build those patterns over time. Then one week, everything changed. Michael traveled overseas for a conference. Suddenly, large transactions appeared from unfamiliar locations, and there were repeated login attempts from another country. To a fraud system, that can resemble a stolen account or unauthorized access. The important point is that the bank wasn't proving Michael did anything wrong. It was reacting to risk signals. Modern banks use automated systems that score unusual behavior in real time. One odd transaction might not matter, but several at once can trigger restrictions. So the bank temporarily limited parts of the account while investigating. After Michael verified his travel and transactions, the restrictions were lifted. Sometimes these cases end normally. Sometimes repeated unresolved risks can eventually lead to account closure.
Have you ever gotten a text from your bank asking, "Was this purchase really you?" That happens because banks use automated security systems that constantly monitor account activity in real time. Think of it like a digital security guard that never sleeps. Instead of checking one transaction by itself, the system compares new activity with your normal habits. It looks at where you usually shop, the devices you normally use, and even when you typically log in. So if your card is suddenly used in another country right after a purchase near home, the system notices. The same goes for repeated failed logins, password changes, or access from an unfamiliar phone or computer. Modern banks also use artificial intelligence to spot complicated fraud patterns faster. When something looks unusual, the bank might send an alert, ask for verification, or temporarily block the transaction. Those extra checks are designed to protect your account, not accuse you of fraud.
Banks monitor accounts constantly, but your habits still matter. The strongest protection comes from layers working together. Start by checking your transactions every few days, not just your balance. Fraud often begins with tiny test charges, and catching them early makes problems much easier to stop. Keep your phone number, email, and address updated with your bank. Security alerts only help if they reach you quickly. Use strong, unique passwords for every financial account, and turn on multi-factor authentication whenever it's available. If one password gets exposed somewhere else online, reused passwords can put your bank account at risk too. Avoid logging into banking apps on public Wi-Fi when possible. Mobile data or a trusted private network is safer. Finally, review monthly statements carefully and report unfamiliar activity immediately. Fast action can reduce losses and help your bank respond before fraud spreads.
What you need to say is panic or ignore it. First, confirm whether the account is fully closed or just temporarily restricted. Then, immediately redirect your paycheck, benefits, and automatic bill payments so you don't trigger missed payments or overdraft fees elsewhere. Next, contact the bank directly and ask specific questions. Was the closure related to overdrafts, identity verification, or a fraud review? Will the bank return your remaining balance by check or transfer? Get a case number and keep records of every conversation. Don't rush to open several new accounts without understanding what happened. Some banks share account history through systems like ChexSystems, so the same issue could follow you. Also, keep checking your mail and email. Banks often send important instructions after a closure. If you still believe the bank acted unfairly, file a formal written complaint and escalate step by step through regulators if necessary.
By now, you've seen how banks monitor accounts and why problems sometimes lead to restrictions. The good news is that a few simple habits can help you catch issues early and reduce risk. Start by checking your account activity once a week. Don't just look at the balance. Scan purchases, transfers, and login alerts for anything unusual, even small charges. Next, keep your phone number and email updated. Banks use that information for fraud alerts and identity verification. If you miss a security message, fixing a problem can take much longer. You should also enable every security feature available, especially two-factor authentication and transaction alerts. Those tools act like an early warning system. Another smart move is separating your finances. Keep spending money in one account and savings in another, so one issue doesn't affect everything. And finally, never trust unexpected messages asking for banking information. Always contact your bank through its official app or phone number.
A bank account is more than a place to park your money. It's a financial relationship built on trust, security, and a legal agreement between you and your bank. Throughout this documentary, we've seen that banks can close accounts for many reasons, including unusual transaction patterns, identity verification problems, policy violations, or broader risk decisions. But an account closure does not automatically mean someone committed a crime. We also learned that simple habits can reduce problems before they start. Review your transactions regularly, keep your personal information updated, respond quickly to security requests, and understand the rules tied to your account. If your account is ever closed unexpectedly, stay calm, contact the bank, ask clear questions, follow the instructions you're given, and keep records of every conversation. Financial knowledge is not only about growing wealth, it's also about protecting your access to the financial system and the money you've already earned.